Hey everyone, welcome back to Corporate Decoder, the place where we decode the Wall Street jargon to find out what is really going on behind the corporate curtain. Today we're diving deep into Zedge Incorporated's latest quarterly report. Get ready because this filing might just have a few surprises up its digital sleeve. And hey, if you love getting the real story behind these financial reports, make sure you are subscribed and join our Discord community, linked in the description below for even more exclusive insights. So Zedge Incorporated is reporting its financial results for the quarter ending the 31st of October 2025. Think of this as a financial checkup for the company. We've got about 12.5 million shares of Class B common stock out there and a much smaller number of Class A shares. This is important because it affects how much of the company each share represents. Let's kick things off by looking at their financial snapshot, the balance sheet. As of the 31st of October 2025, Zedge had about $18.5 million in cash and cash equivalents. That is down slightly from the 31st of July, which stood at $18.6 million. They've also got a bit over 3.3 million in trade accounts receivable, meaning customers owe them money. On the flip side, their trade accounts payable hover around 1.4 million. What is interesting here is how their total assets grew a little from 35.6 million to 35.9 million. Now let's look at how they actually made money or lost it. For the 3 months ending the 31st of October 2025, Zedge brought in $7.6 million in revenue. This is an increase from the $7.1 million they made in the same period last year. But here is where it gets interesting. Direct costs went up significantly, causing their income from operations to jump from a loss of $457,000 last year to a profit of $914,000 this year. They also reported a positive change in other comprehensive income. This quarter, nearly $100,000 compared to a negative $29,000 last year. This means their overall financial health looks a bit better. And for the 3 months ended the 31st of October 2025, they actually made a net income of $788,000, a big turnaround from a net loss of $339,000 in the same period in 2024. Looking at cash flow is like checking the company's bank account. For the 3 months ending the 31st of October 2025, Zedge generated $825,000 from its operating activities. That is lower than the $1.1 million from the same period last year though. Their investing activities used up $185,000. And financing activities also used cash, with $789,000 going out primarily for repurchasing their own stock. Now diving into what Zedge actually does, they build digital marketplaces and games. Their main products include the Zedge app for wallpapers and Ringtones, a generative AI wallpaper maker called Paint, their photo challenge game GuruShots, and Emojipedia, which is all about emojis and data seeds, I for AI training data. They see themselves as part of the creator economy, a huge and growing market. Let's talk revenue details. For the 3 months ending the 31st of October 2025, Zedge Marketplace brought in $7.1 million, with advertising revenue accounting for over $5 million, and paid subscriptions bringing in $1.5 million. GuruShots, however, saw its revenue drop to $468,000 from $644,000 last year. Overall revenue increased by 5.8%. They're measuring some of their assets at fair value. Cash equivalents in money market funds are valued at $11 million, which is pretty straightforward. Zedge used to manage foreign exchange risk with forward contracts, but it seems they've wrapped up those activities in Europe. They don't have any outstanding contracts anymore. Intangible assets like the brand value of Emojipedia net of accumulated amortization stand at about $4.8 million. Their goodwill, which represents the excess of the purchase price over the fair value of identifiable net assets acquired in business combinations, is around $1.9 million. There was a small increase in goodwill due to currency translation. This note breaks down their short-term obligations. Accrued payroll and bonuses are about $1.1 million, and they also declared a dividend payable of $208,000. Zedge uses stock-based compensation to reward employees. For the 3 months ending the 31st of October 2025, they recognized $104,000 in stock-based compensation expense, down from $379,000 last year. This decrease is mainly because a big chunk of stock compensation tied to the GuruShots acquisition has now been fully recognized. Their earnings per share went from a loss of 2 cents per share last year to a profit of 6 cents per share this year. This is a really positive sign for shareholders, showing improved profitability. They mention they are subject to legal proceedings, but do not expect them to materially impact the company. This is pretty standard for most companies. Zedge has a $4 million revolving credit facility with WUB that was renewed until October 2028. This gives them access to funds if needed. Zedge operates in 2 main segments, the Zedge Marketplace and GuruShots. The Zedge marketplace is performing well, showing a 66.4% increase in income from operations. GuruShots, however, is still struggling with a loss of $640,000, though this is an improvement from last year's $1.3 million loss. They have operating leases mainly for office space, and recently moved to a new office in Lithuania. Their income tax expense was $233,000 this period, reflecting an effective tax rate of about 22.8%. Zedge declared a quarterly cash dividend of about $208,000. Even though their book numbers show this as a return of capital for tax purposes, it is considered a taxable dividend to shareholders. Now, for the management's perspective, they acknowledge global economic and geopolitical uncertainties, including the conflicts in the Middle East and Ukraine. They also highlight the risks and opportunities associated with AI technology advancements. They are really leaning into AI with products like Paint, but they admit the market for AI-driven offerings is still uncertain, and competitors are fierce. Plus, recent changes by Google in how emojis are displayed in search results could impact Emojipedia's traffic and revenue. Let's look at their key performance indicators for the Zedge app. Monthly active users or more dropped almost 11.2% compared to last year, sitting at 22.2 million. However, average revenue per monthly active user or ARPMO increased significantly by 29.2% to 9.9 cents. This means they are monetizing their existing users much better. For GuruShots, monthly active payers or MAP fell by 28.4%, but the average revenue per monthly active payer or ARPMAP actually increased to $45.2. So fewer people are paying, but those who do are spending more. Total revenue grew 5.8% to $7.6 million. Zedge marketplace revenue was up, driven by advertising and subscriptions, but GuruShots digital goods and services revenue declined by almost 27.3%. These costs increased by 20.4%, mainly due to higher data center expenses and new development initiatives. This is a big one. SG&A expenses decreased by 13%, a positive sign. This is largely due to lower personnel costs after a restructuring and the winding down of a retention bonus program from the GuruShots acquisition. They are increasing spending on paid user acquisition for the Zedge app, but cutting back on GuruShots. This expense dropped by 43.3%, largely because of an impairment charge taken in the previous quarter related to GuruShots capitalized software. The company paid $233,000 in income tax. This quarter, a significant jump from $49,000 last year, reflecting their return to profitability. This is where we see the Zedge marketplace really shine, with a 66.4% increase in operating income. GuruShots' loss from operations narrowed by 54%, which is good news, but it is still operating at a loss. Zedge ended the 31st of October 2025 with $18.5 million in cash and cash equivalents and $14.6 million in working capital. They believe this is enough to cover their needs for the next 12 months. So what is my take on Zedge Incorporated? The company is definitely showing signs of improvement, especially in its core Zedge marketplace segment. The increase in ARPMO for the Zedge app is a strong indicator that they are effectively monetizing their user base, even if the total number of users is slightly down. That is a classic Warren Buffett type of move, focusing on profitability over sheer user acquisition numbers, when those numbers are becoming expensive. The significant reduction in SG&A is also a major win, showing good cost management. However, GuruShots remains a concern. While the losses are shrinking, it is still a drag on overall performance. The company needs to find a way to either turn GuruShots around or potentially divest if it continues to underperform. The reliance on a single large customer for 34% of revenue also presents a concentration risk that investors should be aware of. They are also navigating the evolving AI landscape, which brings both opportunities and significant potential risks that could impact their future growth. In conclusion, Zedge is moving in the right direction with its core business showing resilience and profitability. They are treading carefully with AI and managing costs effectively. The key will be to see if they can reignite growth at GuruShots and mitigate the risks associated with Emojipedia's market changes. Alright, that is our deep dive into Zedge Incorporated's latest financial report. What do you think about these numbers and their strategy moving forward? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns. And as always, don't forget to join our Discord community, linked in the description for more exclusive insights and discussions. Thanks for watching, and we'll see you in the next video.